It's time to do business again. Welcome to Business Incorporated. We have 25 minutes to give you updates from the world of business. And here's what we prepared for you. Uganda's export is up. It increased 11.3% in June. South Africa has issues with water infrastructure. We'll tell you about it in the course of the program. And Tanzania is targeting $30.1 billion investments. Welcome to the program. I'm Ini John McQuarrie. We'll move from the global oil space where prices are higher today after U.S. President Donald Trump has vowed economic warfare on Iran and financial penalties for its supporters, as the United Arab Emirates said that it is suspending trade with Tehran. So this afternoon, we see a further increase from what we had earlier today. It's gone up 2.31%. Talking about Brent, the price is $93.80. WTI is also up almost 2.5%, $87.96. And gas is on the flip side, almost 2% drop is what we record at this time, $2.75 for that. And then going to metals, investors are booking profits. That means they're taking out money from their investment there. We saw that after prices climbed to more than a 2-month peak. That surprise U.S. Treasury liquidity support announcement that has brought that sentiment to the markets. And so we see spot gold slipped 0.04%, not so much, one would say, at 4,543.50. Spot silver is up 1.78%, $67 about 1 cent. Platinum almost 0.5% increase at 1,819, while palladium and copper are in the red this afternoon. Other stories now. Uganda is seeking up to 207.7 million euros equivalent from the Citibank, and they said they want to use this to finance the construction of a major road project in the eastern part of the country. The proposed borrowing is part of the government's efforts to expand infrastructure and improve transport links, with the Finance Ministry confirming the financing plan in a statement. And the funding would support road construction aimed at improving connectivity and facilitating the movement of people and goods across that eastern region. The latest financing plan adds to Uganda's wider push to mobilize external funding for infrastructure development. Citibank had previously arranged financing for major Ugandan infrastructure projects, including road development. And following that, we see that Uganda's export earnings, that's up also, as we told you earlier. It's gone up 11.3% year on year to $1.28 billion in June. In June, it was $1.15 billion. It was recorded in the same month last year. The increase is driven mainly by stronger shipments of key commodities, particularly gold and cotton. And this information has been shared by the Finance Ministry of Uganda. And gold exports recorded the strongest growth, with the value of shipments surging 43.5% to $685 million during the month. Uganda remains a major regional hub for gold processing and exports, and the rise in export receipts strengthens Uganda's external trade position and provides additional foreign exchange earnings, while highlighting the growing contribution of commodity exports to the country's economy. And in South Africa, we see the rand is showing a little movement in early trade today. Investors are assessing developments in global financial markets and the latest moves in the U.S. bond market. The currency remains sensitive to shifts in global interest rate expectations and investor appetite for emerging market assets. Market participants are also watching domestic economic indicators for signals on the direction of monetary policy and South Africa's broader growth outlook. Still in South Africa, the government says that they will not run out of water despite growing concerns over aging infrastructure, rising demand, and pressure on the country's water resources. Water and Sanitation Deputy Minister David Malobo says billions of rands are being invested to strengthen infrastructure and secure reliable water supply for the future. Our South Africa correspondent Innocent Samosa has more on this.
South Africa is facing growing pressure on its water infrastructure, but government says the country will not run out of water. Water and Sanitation Deputy Minister David Matobo says billions of rands are being invested to secure water supplies and strengthen infrastructure. The government is also working to address challenges linked to aging water systems, maintenance backlogs, and of course rising demand. Matobo says also the investment is aimed at ensuring that South Africa has a reliable and sustainable water supply as the pressure on resources continue to grow. But also the assurance comes amid increasing concerns over water security, with municipalities across the country facing infrastructure challenges and in some areas, of course, disruptions in supply. But the government, we do know that says investment in new infrastructure, maintenance and improved water management will be critical to preventing a water crisis and ensuring that communities in the country and businesses at large have access to reliable supplies. Now, officials maintain that while the challenges, of course, are significant, South Africa has the resources and plans needed to secure its water future. From Johannesburg, South Africa, Innocent Simos, Channels Television News.
Thank you so much, Innocent, for that. We go to Tanzania, where the country is positioning itself for a major wave of foreign investment, unveiling a pipeline of 68 projects valued at more than $30 billion. The government plans to present the projects to European investors through investment roadshows in Finland, Italy, and the Netherlands. The initiative spans multiple sectors and reflects Tanzania's push to attract foreign capital, expand productivity capacity, and strengthen its position as an investment destination in East Africa. Now to West Africa, Ghana is looking to attract billions of dollars in new foreign investment, with India's Ramki Group proposing an investment portfolio worth at least $2 billion, and that's going to be across 6 sectors. The proposal comes as Accra seeks to increase private sector investment and diversify economic activity. If implemented, the projects could bring fresh capital, create jobs, strengthen Ghana's industrial and infrastructure base. And talking about investment, let's see what the United Capital PLC has for us. They recently launched a new report to tell Nigerians and indeed the world of what we can expect, especially in the area of investment this year. So it's a United Capital PLC projection for 2026. They're projecting that the NGX, as a stock market, will deliver a further return of 11.6% in the second half of this year. So if you're not part of the market yet, perhaps you want to seize these opportunities. So they see the NGX delivering 11.6% in the second half of this year, which has already started, bringing the 2026 total return to 64.53%. And the major drivers would be banking, building materials, telecommunications, food and beverages, and the power sector. So, of course, we have companies listed on the NGX from all of this. So you want to look at them and perhaps it might catch your attention. GDP growth is forecast at 4.1% for the year 2026, led by telecommunications. And this morning, when we spoke about the new entrance of some Nigerians into the $1 billionaire club, telecommunications was top on the list. You know, so you want to really pay attention to telecommunications. There's banking, there's trade, there's crop production, construction, and real estate. These will be the major drivers of this 4.1% GDP growth in 2026, according to United Capital. Let's see other information that they have for us. So they said the following sectors in Nigeria will benefit from the structural reforms taking place We've been talking a whole lot about reforms. United Capital says the current reforms will be very beneficial if you're into infrastructure, energy transition, digital economy, agribusiness, financing, insurance, pension-related assets, and we've seen pension fund drive huge positive movement in the NGX. I think that was in the first half or the second quarter of this year. So they still have room for growth. That's talking about pension related assets, exchange traded funds, that's the ETS, and real estate investment. So there you have it. These are the sectors that you should look out for. However, there are risks, major risks. Some of them are already out here. They are not behind anymore. The Middle East tension is a reality. Election-related uncertainty, that also is our reality in Nigeria. Sharp commodity price volatility, of course, following renewed Middle East tension, increase in energy costs. You can expect commodity prices, persistent inflation, capital flow reversal, global financial market corrections, high debts. We talked about how the United States has hit a record high when it comes to their debts, more than $40 trillion. So high debts from not just Nigeria, but of course from the global space. Weaker oil prices, that's not what we have that is expensive, right? So these are the major risks. I wonder if we have more from the United Capital. Yeah, so in making your plans and your projections and calculating where your capital should go to, well, they are saying, as United Capital are saying, you can look at artificial intelligence, semiconductors, data centers, renewable energy, banking, this for Nigeria, banking, telecoms, building materials, power, and consumer sectors. So just as you're already in the second half and you're about to settle down before the year runs out, it may not be too late for you to make some benefits, even in the midst of all of the chaos, so perhaps you want to look at this area. So I'm talking about power. Nigeria's power sector received some, at least for Lagos. We saw the Minister of Power in Lagos commissioning some projects. So we hope that will feed into what will be distributed to consumers, and I will have more power from the federal government. But let's give you that report about the commissioning of projects in Lagos by the Honorable Minister of Power. Electricity generation receives a boost in Lagos State as the Minister of Power, Engineer Joseph Tegbe, tours 4 substations with a total of 7 132 33 kV power transformers and a 330 kV power transformer project installed in various substations. In Lekki, the intervention comprises one 300 MVA power transformer and 2 60 MVA power transformers, while a 100 MVA power transformer is commissioned in Alausa Transmission Substation. Speaking at the event, the Honorable Minister says the intervention represents more than installation of new equipment.
This commissioning transcends completion of an engineering project to me. It's an investment in one of the most economically consequential corridors in our country. It's a deliberate strengthening of the arteries through which the Nigerian economy moves.
This is aimed to increase total transformation capacity of substation from 135 MVA to 205 MVA, equivalent to approximately 164 megawatts. More importantly, it's set to increase the quantum of bulk power available to Ikeja Electric Distribution Company by 80 megawatts for onward delivery to customers within its franchise area.
We will also use this opportunity to respectfully appeal for similar grant support to be extended to other critical sections of our transmission network. This will enable TCN to continue to sustain and automate transmission operations across the country in line with our mandate. Today, we celebrate progress, partnership, and a brighter energy future for Lagos and for Nigeria.
The commissioning also covers projects in Apapa and Ijora area of Lagos. In Apapa, it's 2 60 MVA substations, And 2 number 100 MVA in Ijora. A total of 540 MVA transformer capacity at 132 kV level, with the ability to wheel 432 megawatts, and 300 MVA transformer capacity at 330 kVA level, with additional capacity to transmit 240 megawatts within the transmission network in Lagos State. Let's go to the commodity space now. We're discussing a girl's best friend. I wonder if it's just the girls now. A lot of people seem to have snatched this commodity from the girls now. Diamonds is what we're discussing. And there's the report that in the first half of 2026, the price has dropped. It's dropped by about 32%. That's a huge one. Means more girls can have more friends. But we have Toju Megasin, an analyst with financial services company, joining us now to tell us, Toju, how come we have a drop in the price of diamonds? Or is the demand reducing?
Good afternoon, Amy. Thanks for having me. Sorry, I just wanted to make a quick correction. That 32% that you just highlighted is actually a fall in the price of rough diamonds, so not actually furnished diamonds or refined diamonds. As you already highlighted, yes, in recent time we've seen a major shift in the diamond market, as there's been an introduction in lab-grown diamonds, which has obviously increased the competition with natural diamonds, as lab-grown diamonds offer the same properties, whether physically or chemically, to natural diamonds, but they range in prices drastically. And the prices for lab-grown diamonds range between $500 per carat, from $500 to $1,500 per carat for a lab-grown diamond, which is synthetic, compared to $3,000 to $6,000 for a natural diamond. And again, the only difference is the rarity and the provenance that comes with owning a natural diamond. So you have to understand this has obviously shifted the economics in the diamond market, causing consumers to shift to cheaper alternatives, such as the lab grown, which has obviously puts a downward pressure on natural diamond prices, obviously, as the demand for them has actually declined.
So can we expect more decline in the price of the natural one, since the lab-grown one seems to be gaining more attention at this time?
In the short term, I expect that downward pressure to persist, again, based on if there's a cheaper alternative that basically has no difference to the original. You would obviously definitely opt for the cheaper alternative, especially in the times that we're in, which we are facing inflated prices left, right, and center. So if you're opting to purchase a diamond in this time, I think your best bet is going for the cheaper alternative. So again, I expect the downward pressure to be persistent. But in the long term, I can see a reversal, just based again on the attributes of it being a rare gem and a rare commodity. So, fun fact for you, actually, diamonds haven't actually been pushed to the surface of the earth, which is a geological process that occurs for us where we have diamonds. This hasn't occurred in the past 20 million to 25 million years. So obviously I'm highlighting this to show you the scarcity in which natural diamonds uphold. And due to that, if everybody that knows basic economics, when a commodity becomes more scarce and with demand and relatively remain the same, you'd obviously see an uptick in the price. But I expect that to happen later down the line, just due to, again, the competitiveness that lab-grown diamonds have initiated.
All right. If you could briefly just tell us, how come it's gold that's perceived as a better storage of gold, of value? I mean, even when we do analysis, we refer to gold and not diamonds. And yet diamonds are supposed to be some very precious stone.
Yes, they are. But again, gold has more of a greater store of value. That's the major difference. As gold is held in central banks across the world. And again, gold has a global transparent price, whereas diamonds actually, their prices range and the prices are very subjective and dependent on the value of the diamond. There's something called the 4 C's.
Now it does look like we're having a little bit of network hitch with Toju. right there, Toju, unfortunately. But thank you so much, Toju, for telling us about that, bringing diamonds back to our faces right there. So the a drop in the price of natural diamond has led consumers back to the lab-grown one, or is it the other way? But anyway, let's go to the market now and see what the color is. The NGX is still in the red at intraday. That's where we saw it in the morning. It's grown even redder, if there's a word like that. It's down 0.30%, 240,038.80. In Johannesburg, it's also red. Seems to be a red day. But Egypt broke that trend. Egypt is up at intraday 0.50%, and Nairobi closed positive yesterday at 0.58%. In the Middle East, we see mixed is what we have for the color. Dubai is up 0.03%. Abu Dhabi is unchanged, but is in the negative. Tadawar is up 0.10%, and Qatar is down 0.92%. In the United States, features just a little bit changed. No surprises there, I guess. 0.13% red for Dow, and S&P 0.01%. That's so slight, almost unchanged. And Nasdaq recovered. Yesterday Nasdaq was the only one that got hit because of those tech results and profit taking, but we see it has recovered today. And moving to Asia, technology stocks are up today in the Asian market, driving sentiment. Nikkei 1.36% in the green, and Kospi looking good. 5.89%. Hang Seng is also very positive, 0.80%. Shanghai and Nifty are also positive at this time. Let's see if we're positive. In Europe, we have Chip joining us to give us update from the market. Hey Chip, welcome to the program. What's the color today?
The color is red. European shares have been inching lower today because, of course, of those higher oil prices. And they are, of course, fueling supply and inflation concerns, which are linked to the Iran war. So the Pan-European Stock 600 is down 0.4%. And here in Germany, the DAX is down 0.6%. Now, of course, President Trump has said that Washington is now waging economic warfare against Iran. And he has also warned of economic consequences against any country that provided any type of lifeline to Iran. And that news has dragged European markets down. Of course, travel and leisure stocks are extremely affected by that because they are sensitive to oil prices. But it is, of course, Germany's DAX which has been pulling down European markets more in today's session. And that is also because the German 10-year bond yield has climbed to a 15-year high amid rising government borrowing because, of course, the German government has been borrowing more to spend on defense and infrastructure.
Yeah, a lot of people are borrowing, Chip. Here in Nigeria, we are hitting on the government on borrowings. In the US, they've hit a record high, and I wonder who we're going to be borrowing from and who will pay back. But another worry there in Germany is low gas storage. And this is very risky because you're talking of energy, among other things.
Indeed, an analysis by energy data provider Montel shows that Germany and Europe are facing the risk of low natural gas storage levels next winter, and that's according to a report in the Business Daily Handelsblatt. Now, that projection is based on the current storage levels and LNG imports. Now, of course, the summer is when European countries normally stock up and refill their gas storage facilities for the winter. But so far, Germany has been falling far short of LNG shiploads, and it is highly unlikely that it will be able to make up that shortfall because, of course, of the ongoing geopolitical tensions in the Middle East. And, of course, based on what President Trump has said most recently, we can't really foresee that there will be any negotiations between Tehran and Washington, which could lead to the reopening of the Strait of Hormuz. So it does seem like, that won't be happening anytime soon.
So does it look like Germany won't be able to meet that target for the gas storage?
Highly unlikely, of course, because right now storage facilities are at the level they normally would be at around the end of June or the beginning of July. And one of the problems that we have here in Germany is that it's also not the government that is responsible or even partly responsible for filling the gas storage facilities. It's private companies, and they they are obviously making a calculation that is not limited to ensuring that supplies are secure. They're also thinking about how they can make a profit, and this is why they buy those the gas at lower prices during the summer, and then they sell it at a higher price in the winter when demand pushes it to a higher price. Now, on top of that, of course, European countries are also competing with Asian countries for LNG supplies, and a big chunk of those supplies are unable to leave the Gulf through the Strait of Hormuz. Now, European countries are at a disadvantage. The CEO of German utility RWE, he did tell a newspaper that Asian countries pay more for LNG, so they have been outbidding European importers. So with no resolution to reopen the Strait of Hormuz, it does look like European gas supplies could be at risk next winter.
Wow, that's so worrying. Let's just hope something happens, Chip, before next winter, and the block will not be stranded. But thank you so much, Chip, and do take care.
Thanks, Ini.
We'll head to the crypto space, and we start with the continuation of what's going on with U.S. Securities and Exchange Commission on regulatory framework for cryptocurrency. It seems like they're proposing a new regulatory framework specifically for crypto assets, including exemptions that could make it easier for digital asset companies to raise capital through token offerings. This is an ongoing conversation from the United States. Hong Kong is hosting CoinFest Asia, and they're bringing together players from across the digital asset industry as the region focuses increasingly on institutional crypto adoption. Maybe Ladi is there, that's why he's not in the office. But Binance has also disclosed plans to halt trading services for 3 crypto assets from the 3rd of September, urging holders to withdraw or convert funds now before then. Those are the headlines from the crypto space, and that's it on Business Incorporated today. Thank you so much for being a part of our 25 minutes. Oh, we did more than 25 minutes today. We did 27 minutes. Time flies when you're having fun. But I'll see you tonight. I don't know if there'll be a recovery on the NGX. Let's just keep the fingers crossed.